Ahoy there, traders. How are you doing? How are we doing? Right, so here is a thought before we hit the charts. And at the very least, this gave me no sense of amusement. So hopefully you can find the fun in my quirky nature. But nevertheless, here's a thought. You're not trading if you're flipping through chart after chart like a mindless zombie. Again, as always, my favorite picture is the Where's Wally equivalent of the stock market, flipping through chart after chart like a mindless zombie, hoping the next one is the one. Now, if you're indicator hopping, maybe you're indicator stacking and just adding indicator after indicator after indicator, hoping that the more bullshit that you put on your charts is going to make you a better trader. The reality is it doesn't work in the way that we think it should work. Similarly, if you're time frame twitching and jumping up and down time frames, maybe using multiple time frames at once. Certainly in my own experience early on, I experimented with this, like most people, to see if it works. But the reality is it's just a time suck. You're going to spend hours looking at every possible opportunity that you're investigating. And then you go the daily, the weekly, the monthly, the weekly, the monthly, the daily, up and down, dancing back and forth. And all you've done is killed 2 hours looking at one chart instead of focusing on the things that potentially could be working. You might find yourself hopping around and hoping. And if you're doing that, you're not really trading. All you're doing is mental masturbation. That's really what we're doing if you think about it. We're not doing anything other than scratching what we perceive to be an intellectual itch. And that's it. All success, any success, whether it's the stock market, whether it's business, whether it's sports, anything that is that maybe you're wanting to improve upon comes from a process. So today, again, we're going to tap into a proven process so that you have the right tools, the best stocks, and the right way to trade so that you can tap into what I call production line trading. This is 28 years now, the culmination of everything that I've done. And the longer I do this, the simpler I'm trying to make what I'm doing done, essentially. But that's what's going on here. So if you are new, welcome to the session. There's one or two new names. Hello. And the way that these sessions roll is we're going to spend about 60 minutes looking at the charts. I'm going to spend 2 minutes just introducing myself, and then we're going to have a look at the charts. As always, the way that you get most value out of the session is to like, comment, share, ask questions. I've got the chat box on the other monitor, so if you're watching it live, I'll ask it in the moment if it's relevant. And if you're watching this on the replay, pop it in the comments below, and when I see it, I'll get to it. So, got questions? Pop a comment. So who am I? I'm just this weird guy who figured a few things out. I'm not a Wall Street guru. I've not worked in the city. I'm just a regular guy who found some measure of success. I like long walks, cake, coffee, occasionally ice cream. I've got a weirdly obsession with flamingos. I go flamingo hunting wherever possible and visit zoos. And I want to spend a lot of time outdoors because I'm gone from the other extreme where, like most people, it's very easy to spend hours and hours and hours flicking through charts after charts. I mention all those things because I've done them. I've done the indicator stacking, I've done the hopping around and all the other bullshit that comes along with it. And it's done nothing but create heartache, anxiety, poor health, illness. So I don't necessarily believe in work-life balance. It should be a life-work balance. Life is going to come first. So just change the order of things and your life is going to be much more enriched. So I've been training since the early 90s. I started hand drawing charts way back then. Yes, hand drawing, you heard me right. I've been trading for a long time and full-time since 2001, essentially. And as mentioned earlier, I am not a Wall Street guru. I'm just a regular guy who found some measure of success. Now, because of that, the only thing I can do, because I'm not a financial advisor, I'm not regulated, you should not listen to me for any sort of financial advice. But what I can do is give you the benefit of my practical, in the trenches, at the hard right edge of the chart experiences, and give you the benefit of all my research and the benefit of all my mistakes at the end of the day. Legally, past performance is no guarantee of future performance, yada, yada, et cetera, et cetera. It's your money. Be a responsible adult. Don't point fingers. Don't run with sharp instruments. Be a responsible adult here. I'm not a financial advisor. I can't say it too many times. What you will see is that the markets Again, there's no guarantee of past performance, but they do rhyme and they do ebb and flow and behave in very similar ways that allows us to have an expectation of the future. And I know it's possible because, again, I've made a career off doing this. I cracked the code. I call it production line trading. It gets results. It's replicatable, not because I think that, although that's what I'm looking for in my own training, but my students tell me that it's replicatable. So just like Emily, hello, Emily, I see you're here. Lovely quote from you. We've got Joe, we've got Anik, we've got Kyle, Colin, Randall, lots of people who have reported their results either publicly or privately, and they're getting good results. And obviously I've got my own results. I generally post what I'm doing. I don't charge a subscription service for my stock picks anymore. You get to see over my shoulder on these weekly sessions, but you can plug into the proven process that I call production line trading. So before we kind of look at the charts, which we'll be doing in just a minute, what I've started to do recently is get into what's your why. What's the reason why we're doing this? Because when we've got a purpose, I certainly trying to evaluate the way that I approach things and why we're doing things and what my own personal motivations are. Think about this. I want to be trading under the guise of trading minimal time, but still get the performance and the expectation of performance from a successfully running business. And one of my realizations is hopefully is influencing the way that I talk about what I do is that I don't want to be at the charts, flicking through chart after charts. It's mental masturbation. It's nothing more than a fancy procrastination. And the reality is the actual act of trading when you've got a process is minimal and everything else is just filler, so that's what I'm doing. So we can use that other time, the filler, the fluff, to do other things. And we can start to put that or answer this question, like, what's your why? So I generally split this into three things, like what stock, the business of trading is what I mean by this. So what's the business of trading? And we're here today to try and expand our learning, or you're here today to expand your learning. I'm here to try and give back to the community. And that's what we can park under the business of trading. And again, you can change stock for whatever is going to be the business side. It could be a side hustle, a side business, the main business, whatever the thing is. But the business of making money is what I'm interested in there. And what curiosity? I want to feed the mind. I do a lot of reading. I listen to podcasts. I'm an avid consumer of written and audio. And I also want to enjoy myself. Otherwise, what's the point? What's the point of doing anything for that matter if we're not enjoying ourselves? I like to laugh, joke, giggle, and I want to spend time enjoying the fruits of my labor, because I don't, like most people, have had a realization with the COVID nonsense that we can come to a sudden stop of life. I had that realization back in 2001. For those who don't know already, I've got Crohn's disease. I've had the priest stand over me, give me the last rites. It's not a pleasant experience. So I had my own personal lockdown after that for about 3 years while I was in recovery. So I know what it's like to be, 1 foot in the grave. And everyone's kind of caught up with that, with everything that's gone on the last few years. So, if you can't laugh at your own mortality, there's nothing left to do. But the point is like, we're here on this earth for a very short period of time. So we've got to enjoy ourselves while we have it. So I want to spend time enjoying myself. There's, spending time outdoors. I like to experience things. I've always been this way. So that's all I want to do, is pose that question to you, because I'm eternally grateful for what the markets have given me. And that's what I want for each and every one of my traders who either comes to these free sessions or even works more closely with me. So what's your why? Is it financial peace? Is it a better life? Is it more time freedom? Is it extra income? Is it to be a world-class trader? This is going to finance everything else. And if you're more altruistic, that's fine. I give a lot to charity. I don't usually talk about it. But if you want to be more altruistic, you've got to look after yourself first and get your own finance. You get your own house in order before you can start to be more altruistic. And you can do both those things at the same time. You don't have to wait. But all I'm saying is you need to put your own oxygen mask on first, is that kind of cliche saying, before you can help other people. So you need to get your own house in order first, but you need a purpose to be able to make it happen in the fastest and smartest possible way. That means that you can then set yourself on the right path for your own success. Now, should you want to speed up your own success, I'm not ashamed to admit it or say it, you can work more closely with me. This is the lowest pressure sales thing. I don't like being sold to. It's an invitation. If you want it, it's here. If you don't, that's cool. So you can work more closely with me. I have limited places for one-on-one mentorship, very limited place for the reasons that I've mentioned. I want to spend little time at the computer, but at the same time, I really enjoy doing it. I also have a group accelerator program. We're seeing some great successes. And at the moment, I'm in the process of just mapping out the latest version or my latest understanding of what I do. And there's 3 elements to it: the mind over money, where we can reset your training mindset so that you never make an emotional or reactionary training decision again. We're going to look at a mechanical strategy. We're going to touch on that today so that you've got something that you can actually put into action today. And for those who know me, I try and hold as little back as possible. Practically, I'm giving as much as I can away in a free session in a very short space of time. But nonetheless, the mechanical strategy is usually what we focus on in these sessions. So using proven rules to start, consistently create your own, quite literally infinitely scalable income stream from swing trading. And the last part of how people work with me is trend reviews. Review your trades. We look at past trades, future trades, setting up so that you can develop the skill of trading. This is how you become a world-class trader. Now, if you take the word trading out and money out the equation just for a second, this is the process for success generally. You want to combat the mindset. Again, I'm not a tree hugger. Don't mistake what I'm saying, but there is a large element of mindset. Just making the decision to take action, that lack of procrastination. You've got to control all the bullshits around your life. And a lot of it's self-imposed with the mind. I never thought I'd be talking about this in my 20s, but nonetheless, as I'm in my age unknown, there is a mindset element to it. We want a mechanical process to follow. And again, we could be talking about sports, we could be talking about business. And then we always want to look backwards and review. We want to review that, what we've done. We want to see how far we've come. We don't want to look into the future as such. I think that's a little bit of a fallacy, but we do want to look backwards and look at our starting point and then compare that to where we are now, because it's progress and small incremental adjustments that's going to mean that we continue to improve. And I certainly do that for myself. And this is what I try to do for each and every one of the students that worked more closely with me. Now, despite that, last week, I extended an invitation to get you started. One of the things that I've realized is that some people are stuck right at the beginning of their journey because they don't know the tools, they don't know the right stocks, they don't know a process. So tomorrow, I'm going to be doing what I did last week. So last week, I had 2 amazing people who took me up on this invitation. So if you are stuck and you feel like you're missing out on all the best trading setups, and maybe you're sitting on the sidelines, even when you do find something that looks amazing, let's hop on a complimentary, make it work now, hands-on training. This isn't like now where you're sitting and watching me. It's Trader TV. It's going to be a workshop. It's going to be hands-on. And let's just get you set up with the charts. Let's get your best foot forward so you've got the right charts, the right tools to make it work, because that's the thing that's missing for most people. Again, I remember when I was way, way, way back in the day, I'll date myself a little bit, but I remember sitting on a sunny Sunday morning in Blockbuster Video, reading yet another 1,000-page technical analysis book. There's nothing more than a doorstop for me these days. And looking at all the information, I've read these books multiple times, but at no point does it say how to actually implement all the bullshit that the author's talking about. So that's what I try and do. It's how do you make all of that work? Or basically, how do you ignore the stuff that doesn't work and make the stuff that you should pay attention to work like it's supposed to? So that's what this session is designed to do. I'm not doing it today. Last week I did it on Friday after this session. So tomorrow I'm going to do an open session, and then I'm going to do an invitation only. The way that you get the invite is be on the first session. So I'll get you set up with the right tools, the right charts, the right stocks to follow. I'll show you just one of my 6 money-making blueprints, which we're going to touch on today as well. But I'll go through everything in as much detail as possible. There are limited spots. Obviously, I can't do it for a large number of people. So it's going to be first come, first served. And I will show you how to get access to it later today. So you can reserve a spot for tomorrow. If you don't show up on time, some people had this happen to them last week. If you're late, you don't get in. If you're going to, so it's going to be Saturday morning, 10:30 Eastern. You will need a mic. You will need to share screen. It's going to be a hands-on interactive workshop. So no lurkering. Lurkio. Does anyone remember that? Pompeii, was it? No lurking. I think I prefer lurkering, actually. No lurkers or ings. So stay tuned. I'll show you how to access that later. But essentially what I want to do is just get you over that first hurdle. Lots of people get stuck, particularly at the beginning of the journey, and I see them give up too soon. So I don't want to let that first obstacle prevent you from seeing success. And what you'll realize, I'm just actually seeing it, is Raj is here. Raj, you were on this last Friday. What did you think? I mean, if you want to pop a comment and let everyone else know what you experienced, because you were one of the lucky winners last week that took me up on that offer, just to get you over the hurdle so that you can start to make it work. So if you feel generous, pop a comment. I'll share that with everyone else. While you're doing that, let's go full nerd on some charts. Let's go and do it. Let's do it. So the sessions again. I'd like to also add, if anyone wants to investigate some stocks, want to post a stock that you're looking at, that you're interested in, because one of the things that we get to do as traders is we get to evaluate if a stock is a good stock, if a chart, it could be a stock, it could be index, it could be a future, it could be an ETF. Is it a good opportunity? Oh, Raj, thanks very much. So enjoyed it very much. Gave me a good chance to appreciate the method. Most certainly recommended. There we go. So no catches, no strings, just some love to get you past a hurdle. Thank you very much for your feedback, Raj. So what's the process? What's the process? You'd be very surprised. It's very simple. I don't do anything complex. But what we want to do is we want to have rule-based trading. So I'm going to look at the average prices. We're going to look at the 200-period moving average. We're going to look at the 50-period moving average. We're going to look at the 20-period moving average. It's a classic combination, is how I refer to this as. We could use faster moving averages. We could use slower moving averages. Now, the reason why I'm using these moving averages is because this is typically the same combination that most institutional traders look at. The institutional traders are the ones that move and influence the markets. I want to know what they're looking at. Becomes a self-fulfilling prophecy from time to time. But this is a combination of moving averages that's been used a long, long time. And it's not that these are magical. If we were speaking 3 years ago, I'd be using Bollinger Bands to describe exactly the same process. The point is I just want to use a tool as a frame of reference to read the charts, because without it, it's difficult to interpret. It's not impossible, because for many, many years, I traded very discretionary. I just looked at the charts and I just looked at price without any indicators. I tried to say indicators and ended up saying indications. Nonetheless, you get what I'm saying. It was a naked chart. I was just looking at price. I was what I consider to be a price action trader. I still consider that is what I am today, but I'm just using the tools as a frame of reference. So it's not that they're magical or there's anything special about these. We could be using a 10, a 30, and 100 period moving average for reference, and we can equally find good trades. That combination of moving averages would be good for, faster, maybe get paid at the end of the week or 7 to 10 days type of trades. The 20, the 50, and the 200 moving averages, they're good for me based on my lifestyle. As I mentioned right at the beginning, I want to spend as little time at the computer. Using this combination of moving averages, I'm able to evaluate trading opportunities that allows me to get paid on 30 to 45 day cycles. I refer to that as the end of the month. It's not literal calendar month but the trades typically last 30 to 45 days. Sometimes you get clusters of trades. Sometimes you're going to have a week or three where there's nothing developing. That's the nature of the beast, and I'm okay with that. And that means that I get to do all the fun stuff that I was talking about earlier without having to flick through chart after chart like a mindless zombie, hoping that the next one is the one. Whew. I might have said that once or twice. I like saying it, if I'm going to be honest. It rolls off the tongue. So by plugging in the moving averages in the way that I do, I'm at its most basic looking for price to be above all three moving averages. When price is above all three, go long. When price is below the moving average, 1, 2 moving averages, and certainly if it's below all three, I want to forget about it. So above it, go long. Below it, go to cash. Above it, go long. Below it, go to cash. Above it, go long. Below it, go to cash. So right now, the S&P, this is the S&P 500 charts. Right now, price at the beginning of the year, so there's 2022. Right there, price went below the moving averages, or certainly the 50-period moving average, in 2022. So this is what we call a retracement. It's a dip in the context of a trend. Now, it's not buyable yet because price needs to turn around. So when price is below, it just keeps you on the sidelines. And you quite literally could have avoided what turned out to be a 20% drop in price. And if you've bought the high, and many people did, you could have got out for a small loss and then sat in cash. We've seen all the social media cries of, all the boohoos, all the tears because they bought at a market high. With just a simple framework, you can be in the market when it's moving favorably. You can be out the markets when it's retracing. And, you're going to be holding cash. So if you're trading the S&P 500 futures, right now you're in cash. Now, there's plenty of other opportunities on individual stocks and ETFs, because there's plenty of other opportunities. And we're going to look at those right now. I'm just explaining the basic concept. So right now, when price is above the moving averages, go long, and then we just highlight them. Again, not every instance where that happens does it work and make money. I'm just highlighting the times where if you'd gone long as per the rules that I mentioned, you would have got stopped out. So on average, you can see, where's my little drawing tool? So on average, bear with me. There we go. So on average, we can see that if we go long above, so we've got 1, 2, 3, 4, 5, 6 bullish opportunities. And we've got 1, 2, 3 times. So 3 out of 9 times that it failed. 6 out of 9 times it worked. That's pretty cool. You're making money. So on average, so the point I'm highlighting here is we've got a simple rule-based approach to identify opportunity, to be in the market when it's the right time to be in the market, when price is moving favorably, swinging. We've got risk parameters that keep the times where, okay, it's not behaving favorably, or I like to phrase it, it's not necessarily that I'm wrong, it's just that I mistimed the trade. So here, we only with hindsight can we say we mistimed it. It's not that we were wrong, because price eventually turned around. So I would remove the word wrong out your vocabulary. Hey, on average, we make money. Just like any other business. If you buy products and you have them in stock and you don't sell any that day, it doesn't mean that you bought the wrong product. It just means that you didn't have a favorable market that day for people to buy shoes. Maybe it was raining. Maybe the trains were off. Maybe something was happening local, like yesterday, St. Patrick's Day. Probably little was going on from a shopping point of view on my hypothetical shoe shop on the high streets. Too many people were enjoying themselves for St. Patrick's Day. Okay, great. So market conditions weren't favorable for regular shopping. It was very favorable if you had a pub or a bar or a restaurant, because people were going out and celebrating. So it's the same thing. It's not that you're wrong. It's just that at that moment, it was just, well, in our case, it was mistimed. So plug those rules into an algorithm. That's all rules are, an algorithm. If this, then that. If this, then that. Then what I get to do is I can look back over the last, in this case, 20 years. There we go. So in this case, 20 years, I can look back and say, if I just did that, when price is above all the moving averages, go long. When it's below it, go to cash or be stopped out. Then I should be able to emulate something like that. That's what I'm looking to try and do, emulators. Again, I can't guarantee that past performance is no guarantee of future performance. It's a little bit frustrating because legally I can't say it, but in actual fact, that's what I'm doing. I'm trying to forecast what's going to happen over the next 30 to 45 days. If the way that I want to trade for the last 20 years has been favorable, then there's a bloody good chance that for the next 30 to 45 days, it's going to do something similar. I think there's a high expectation. This is what a positive expectancy strategy looks like. This is what an edge looks like. This is how we consistently find, filter, and sort opportunities that makes us money on the markets. That's it. That's my most profitable money-making pattern. There's 6 of them that I teach all my traders, but this is the one that I lean into the most at the moment. So that's what we're trying to do. Does that make sense? Before I go any further, does that strategy, do the rules make sense? It's nice and simple. So every time, just check the chat box in a moment. So there's the 50, there's the 200. So every time, let's just use one of the averages for that. So every time price comes down to the 50 period moving average, this is a buyable dip, Not every dip is buyable. Just because you see a down day doesn't mean that it's buyable. So we're just giving ourselves strict conditions to say when price is not only dipping, but dipping in the context of the trend as determined by the average prices being stacked on top of each other, then I can look for a buyable dip. Great. When that happens, here's all the opportunities. Now, not every trade needs to be placed, because if you've already got a trade open, then the next one that sets up might not be necessary, but you get what I'm trying to say. Oh, there we go, I've missed one. There's one there, but these are all buyable dips. There's plenty of opportunities to join the trend. And again, the same is true for bearish trends. So if you want to trade bearish and profit from downward movements in the markets, just do the opposite. Just invert everything. So right now, from the beginning of the year, the strategy on this chart is saying, you know what, just wait a goddamn minute and don't be silly and don't chase moves. Just wait for the opportunity, because the data suggests that, not me, I'm not any smarter. I'm not reading the chart anymore. I'm trying to do as little discretion. I'm trying to have zero opinions on the markets. If you've been following me for any length of time, I've been very vocal about the fact that I got absolutely spanked trading my opinion about 15, 18 months ago now, almost 2 years. Wow, time flies when you're having fun. It's almost 2 years ago. So I traded the crash, nailed it, made a metric, insert your own expletive amount of money, and then completely buggered it up because I tried to trade my opinion. I got a little bit egocentric. I increased my position size and I tried to be smart and trade my opinion. And for about 3 months, I just got myself backed into a corner. It took me a further 2 months to unwind everything and turn it around. And hopefully it explains why I'm quite, what's the right phrase, obsessive over follow the damn rules. Again, I've learned this lesson a few times over the years, and this was the most recent time that I've learned it. But these are expensive market mistakes. Now, I like to think I'm a rule-based trader, but I'm human. I will make mistakes from time to time, and that's the most recent one. The previous time was 10 years previous. So, what will happen is, as a trader, a little bit of a sidebar, what will happen as a trader is you will make mistakes. You will press the wrong button. You will go, you know what, I'm just going to go off-piste on this one and trade my opinion. We all like to do it. We all like to scratch the intellectual itch from time to time. We're human. It's natural. But the more that we can focus on following a systematic approach, then the less mistakes that you'll make, because what will happen is you'll get lucky on the viewpoint, the opinion, the discretionary interpretation, but it won't be consistent because it's discretion and it's open to interpretation. So I'm always been trying to remove that from my own trading, because I want to sleep at night. I don't want to have sweaty palms. I don't want to have the anxiety issues that we all have when we second guess ourselves. So this is what I want for me first. Now, as it turns out, it means that you can do this, the strategy that I'm describing, around other commitments, fun, having life, day job. And when you learn the process, you can eventually just check in two, 3 times a week with this. It can certainly be done regardless of your experience level in 20 to 30 minutes. And you probably do it every day, in fairness, initially while you get used to the process. But it can be done in a very short space of time. Anyway, so we've got the rules. We know what a Bible dip is. We've got an instrument that is, so the next part of this is finding an instrument that is favorable for this style of trading. So this is what the back testing allows us to do. So if you've got a ticker that you want me to evaluate for this style of trading, it's a passive, profitable swing trading. I don't think there's a better way to describe it, but it allows me to do other things that I enjoy doing. A way that I scratch my intellectual itch is I like to help and educate people. I am the type of person that likes to stop tourists to see if they need directions. It's in my nature. For other people, it's not necessarily in their nature to educate and help people. But that's just the way it is. So if you've got a ticket that you want me to evaluate, pop it in the box. Otherwise, I'll just go through my little watch list. So finding stocks, finding opportunities should become a little bit easier. And what we should end up with when you start looking, or firstly, when you have a strategy with a positive expectancy, you've got a systematic approach to find opportunities and identify buyable dips. We can then apply that to a small group of stocks. Not every stock. Don't fall into the trap of trying to trade everything. So what we want to do, and what I do, is I have a small group of stocks. Again, on the left here, I've got my top 15. So what I do, and I do this once a year, is I want to build a portfolio watch list. Now, because I don't know which trade is going to work, I need to apply the strategy that we've just been through with consistency on every opportunity. So the way that you get success is you apply a proven strategy on a group of stocks in this case, and apply the process consistently with small position size so that we get the frequency that can emulate this performance. That's what I'm trying to do. And I can't even guarantee that I will get exactly the same performance, but as long as I can get something similar, I'm going to be super happy. And if I can outperform the benchmark, so the algorithm, clinically, mechanically, trading everything. So if I can outperform the strategy, which I do with the other 5 money-making patterns, so 6 money-making patterns in total, if I can outperform it, then great. Because there's a few things that we just can't program, but can still be systematized in their evaluation. But it requires visual inspection. Again, it only requires that for the moment because I not quite figured out how to describe it to my programmer. Again, I'm not a programmer. I describe what I want, and he converts that to the language that allows this. So I just come up with the rules. And so that's all I'm trying to figure out. So then I can have that coded up into the algorithm, essentially. But despite the other stuff, we've got a good positive expectation. That's all that matters. So if I go through the opportunities, then I get to have a good strategy with a proven list of stocks. And again, for example, I've got 89 stocks. That's my universe. That's all that is in this watch list. 89. It looks like there's more, but there's actually duplicates just because I organized them in a very specific way. So I've got 89 stocks. Now, 89, it doesn't matter about the number. You could have the top 15. You could have the top 25. You could have the top 35. What's going to be different between my top 89 and your top 15 is confidence, capitalization. Maybe you've got a small account, maybe you've got a large account, but you're brand new. So there's a few factors that are just going to influence where you start. But the point is, it doesn't matter about the size of the portfolio. It just matters that you have the ability to trade the portfolio with consistency. Let me pause there. That's a really important comment, and I just don't want to run past it like I normally do. The way that this strategy and any strategy works that is based on a systematic and rule-based approach is to apply it consistently so that we can emulate the performance that we're expecting. Does that make sense? So the mistake that a lot of people make is they, as we said at the beginning, they bounce around, they hop around, they indicator hop, they strategy hop, they symbol hop, they're hunting for opportunities. Now, so they're hunting. Let's use the food metaphor. They're hunting for an opportunity every day, and they're looking at the entirety of every known stock in the known universe that's listed on the market. And what I'm suggesting is when you've got a proven strategy, you find a group of stocks, 15 or 89, you run the algorithm through lots of stocks essentially that meet the criteria. And eventually you have, hey, this group of stocks behaves reasonably well. Great. So if I just apply this strategy on this group of stocks that has a historical tendency to behave favorably for the way that I want to trade, then I should be able to make some money. Again, I don't know what's going to happen tomorrow. I don't know what the market's going to do. I just know that for 28 years, that's what I've been doing. And it seems to be working. So why these stocks over others? They're proven expectation. So then how do we manage those opportunities? How do we keep on top of it? So one of the things, and I should have prepared this earlier. One of the things I'm going to do is just show you how you can very speedily keep on top of the trades and the opportunities. So one of the things that I can use TradeStation for, and you're just seeing me do it, is, bear with me, is I'm able to use the watch list, and I can actually have indicators in the watch list. And I appreciate not every platform has the ability to do this. There are some platforms where you can do something similar. You can upload a list of stocks, for example, and find and filter and scan and sort them. Now, the way that I like to do it, I like to use what I refer to as a traffic light system. So all I've done is I've sorted these stocks. And let me just put the chart intentionally blank for us because I want to focus all my attention on the left-hand side here. Now, if you're watching this live on Zoom with me, you should be able to pinch the screen if you're on a mobile or an iPad. On your computer, there should be a menu somewhere that allows you to zoom in. So if you need to zoom in, you can do. I've discovered that depending on your mobile phone, you can actually zoom in on YouTube. So if you're watching this on the replay on YouTube on your phone, you can pinch as well, but it might depend on your phone and your operating system. It was a happy accident this morning that I discovered while I was watching something on YouTube. Right, where was I? Quick slurp. So what I want to do, so let's just explain. So these traffic lights, red, red, blue. So this blue, blue, blue is referencing the 20, the 50, and the 200. And then the fourth blue is the direction. So we've got four colored columns. So the one on the right, and I'm just drawing it. So the one on the right is the 50 period is above the 200, which gives you that mechanical bullish direction. Then it's saying, where is price in relation to the 200? If it's above it, we're going to have a blue. If it's above the 50 period, we're going to have another blue. And if it's above the 20 period, we're going to have a blue. And that's when we looked at it earlier. That's when price was above all three moving averages when we looked at the chart. It was above the 200, it was above the 50, it was above the 20. At that point, go long. So conversely, when we have a red either on the 20 and or the 50, then that must be a dip in the context of a trend. That's that Bible dip that we spoke about earlier. So that's what I'm going to look for. So let's do that over here on the left. So what I can do is I can rank and sort, like in a spreadsheet, all the stocks that have, or I'm expecting to have, a bullish bias and a bearish bias. So right now, so these are all the stocks that are bullish, at least from a mechanical viewpoint. I don't know if they are because I've not looked at the chart yet. And I've got a duplicate there, so let me just delete that one. So these are all the stocks. The average price, the 50 is above the 200. And I've got a little number here that says, and it's been in that state for many months, many years. In the case of Apple, 701 days ago, the average price has crossed over. So we've got a long-term trend. So then I can sort, and I'll just do the bullish side for speed, which stocks are in a bullish trending. So the price is above the 200. Great, that's what I'm looking for. And then I can say which stocks are above the 50. I'm sure we can see where this is going, and which stocks are above the 20. So these are the stocks. Let me just put a little bit of separation so it's easier to see. So these are the stocks here, those ones there that I've just highlighted. These are all in a bullish trending state. I refer to this as a phase 3 trend. It doesn't really matter what we call it. That's just what I call it. But they're in a phase 3 trend. So they're coming back to our chart. They're above the 200. They're above the 50. They're above the 20. So what I can say is I can zero in on those stocks. I should be in a trade on those stocks. So if I'm following this process that I've described to you, because again, it sounds like tracking 89 stocks or even tracking 15 stocks. We're only looking at the top 15. Tracking 15 stocks seems like a daunting task. Well, I don't have to look at all the charts. I just want to know which ones I need to look at today. Let me say that again. I don't need to look at every chart every day, all of the time. Even on my chosen universe, I only have to look at the ones that make the most sense to look at today. So the reality is I can get away with looking at 1 or 2 charts a day, and then becomes a 2-minute task. When you've sorted this once, all you need to do is maintain it. So this is how you can check in 2 or 3 times a week. And as I keep saying to my accelerator group, is there anything for me to do today? Is it above is price above all 3 moving averages on the left? If the answer is yes, then I can consider a trade. There's a bit more to it than that. I appreciate it's an open session. I'm giving away as much as possible, but without going into the exact specifics, which takes, there's an extra checklist for. But broadly speaking, if you do that, then you won't be too far wrong. So what I get to do is quality control. So one of the things that I get to do, I get to say, well, all these trades meet the bullish criteria that I described earlier. And the algorithm, the rules that we mentioned, should be long on these stocks. So I can go and look at them. I know that they're good performers because I've already checked out their 20-year track record. I've already done the heavy lifting or the groundwork, if you like. So am I in a trade on Halliburton? Yes, don't need to look at it. Am I in a trade on Marriott Hotel? Yes, don't need to look at it. Am I in a trade on NVIDIA? Yes, don't need to look at it. Am I in a trade on PXD? Yes, don't need to look at it. Am I in a trade on SQM? You know, I honestly can't remember if I am or I'm not. So let's go and look at it. So that's the only thing I need to look at. So SQM, oh, there we go. So that's why I'm not in it. So previously it gapped. I've got a brand new trade. I get a little bit late to the party, but I can certainly think about a trade. We spoke about this in real time. We were waiting for a breakout, and then it just gapped and went. And I was just doing something else at the time. WCC is another one. Let's go and take a look at it. You know, is there anything for me to do here? Well, actually, now I'm looking at the chart. It looks like it's in a consolidation. I've already got it marked off. I'm going to wait for the breakouts. Cool. And I can actually see that. That's what that number's telling me there. I can see that consolidation without actually looking at the charts. Now, just so that you can see what I know already to be true, if I wasn't in a trade, I can say, well, you know, these are the first stocks that I'm going to look at. Do I have an opportunity to join the trend? So Halliburton, well, now we're looking at this chart. We've had this consolidation, essentially. We spoke about this last year. We've been trading the range last year. If you've been following me for any length of time, we've clearly got a breakout or had a breakout. It's now trending. Again, I'm already in a trade, but if you needed a new trade, prices retraced back to the moving averages. There's your Bible dip. If you're not in a trade, there's one right there. Cool. I don't know if the next one's going to work any more than anyone else. Now, I'm already in last week, so I don't need to worry about my entry. I've already taken an entry. But what I do know is that it has a historical tendency to behave favorably for the way that I want to trade. So I'm not thinking about the trade. It is going to go on. It is favorable. And it's not necessarily because of all the stuff that's going on in the world. This is a stock that over the last 20 years has behaved favorably for the way that I want to trade. I'll say it again. It's not because of the weird stuff that's going on in the world that the energy sector is hot. It's speeding up what is already favorable movement or favorable behavior. It's not that I'm trying to take advantage of anything that's going on with the geopolitical blah, 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 et cetera, et cetera. This is a stock that behaves favorably the way that I want to trade. I'm completely agnostic to the news, the media. I don't care about fundamentals. I'm not looking at earnings. I'm not looking at the chief executive. I don't care about who's fiddling who. I don't care about world events. Well, I do on a personal level, as I'm sure you can appreciate, but I'm just trying to profit from the swings in the market. That's why it's in my universe. It's one of the more favorable stocks that I can trade. It just happens to be in the energy sector. Cool. Ooh, my thing has frozen. Oh, that's fine. It's doing a backup. Let's cancel that. Cancel. Come on. Cancel. There we go. So while that's just there, reconnecting. Does that make sense, folks? Is everyone happy with the logic behind this? It's a simple process. Is price above the moving averages? Yes or no? If yes, look for a trade. If it's way, way, way far away from the moving averages, then it's rallying in an uptrend. If I'm not in a trade, then I'm not going to chase the move. If it's close to moving averages, then I can get myself positions. Cool. So I can quality control those trades. Now let's look at what a dip in an uptrend looks like. So the dip in an uptrend is going to be the red, blue, or there's two choices. It could be red, blue. So for that to happen, if I just use this chart as an example, for that to happen, price needs to be, there's the 200, there's the 50, there's the 20. So for a Bible dip to happen, price needs to come between the moving averages, either below the 20, or, as we said earlier, or below the 50. Cool. One of those two things. So that's what this traffic light system here that I'm describing is, and that's what those stocks over there are doing. So there's two stocks for me to look at. So these are marked. So assuming that I'm in everything, all the potential. So that's my potential. I've got trade on everything bar one because I missed the boat. I was up a mountain when it went. So I'm not going to chase it. Practice what I preach. So there's only two things for me to consider. These are dipping in the context of a mechanical trend. So before I even look at the charts, before I do anything, just by ranking and sorting and keeping an eye on this traffic light system, I only need to look at two things today. I don't even necessarily need to place a trade today, but at least I can go and look at them. Let's do it. So let's take a look at Apple first. Second one. So Apple, there's the moving averages. So price is above the move. There's the 50, the 20 is there. So I need price to go on. There's the 200. So I need price to turn around and go back above the 50-period moving average. That's it. That's when price will be above all three moving averages. That's all I need to wait for. So it's not no, it's just not today. And it's probably not even going to be, well, given that it's Friday, Phil, this next comment's not going to be a huge leap. It's not even going to be this week. It might not even be next week because it's a little bit of a distance away from $170. But that's my line in the sand. When it goes back above, I can look for my entry criteria and put the trade on. Do I need to do anything today? No. Great. Come back tomorrow, or in Monday's case. So, but you're going to be watching $170. That's fabulous. Let's take a look at LNG. So if I'm not in a trade already on LNG, then I can look for a brand new trade on LNG. Price is trending, mechanical trend. It's retracing below the 20. There's the 50. There's the 200. And you can just see the algo there has actually just fired off a brand new trade because yesterday it went above the moving average. It dipped below and went above. Great. That's the rules. Now, I don't know if the next trade's going to work. All I know is that on average, this is a chart that historically behaves exceptionally well for the way that I want to trade. I'm not second guessing the entry. I don't know if this one's going to make me money. I don't know if it's going to lose me money. I just know that on average, I'm expecting to make money. And I think that last statement is a good place to start wrapping this up because most people are so wrapped up in trying to make every trade a winner. Everyone's a winner, baby, as the song went. But it's not about being right. It's not about making it work on every trade. It's about being right on average, just like any other business. If we had our hypothetical shoe shop on the high streets, would you expect to have a customer every day? You would hope so. But there's going to be days where, you know what? I could have just shut up shop. But if you tried to guess if Thursday of St. Patrick's Day was going to be a day that you could shut up shop, What if that turned out to be the day where lots of people went shopping because it's St. Patrick's Day and they could go and have the shoe shops themselves and buy one of every color? You might get that one random person that comes in and decide today's the day for them. You don't know. So you've got to open up the business from 9 to 5 or whatever your regular business hours are, regardless of whatever holiday or national holiday is or international, or whatever's going on in the world. You've got to be open for business. So this is us doing the stock market equivalent of opening the shop up, of having 9 to 5, of having consistency, making sure we've got staff on the tills, making sure we've got stock on the shelves. I'm going to have a universe of stocks. I'm going to trade every setup without deviation, hesitation, so that I can trade with consistency and use a strategy with a positive expectancy. That's how I make money as a trader. That's all that matters to me. So hopefully you get that. You've got the rules. You've got everything that I do to find the opportunity and time and opportunity. If you want my top 25 stocks, they're right there. Take a screenshot, press pause. There's some of I refer to them as massive gainers. They're some of the best performing charts that I can trade. If I'm only going to trade 15 stocks, I don't even know if there's 15 anymore. I might have pressed delete on 1 or 2 of them. If I'm only going to trade 15 stocks, then these are my top 15. That's it. If you've got a small account or you just want to get started, this is a great place to start. These are the best of the best of the best. And I've shown you. You don't have to believe me. Let's finish off. You don't have to believe me. We've already done it, but nonetheless. Don't have to believe me. There's the proof. If you just do those 3 rules, prices above the moving averages go long. When it's below it, go to cash or get stopped out, depending on what's what. That's the process. There's obviously some more specifics that's a little bit beyond today's open session, but you get the idea. At its most basic, there should be no reason not to at least accidentally make some money on some of these opportunities. And we've got 2 things that could be done today. We've got LNG, Cheshire Energy. You can see that Cheshire Energy has a brand new session. Glenn, yes. How can you sign up for the complimentary session? I was going to come on to that now. I'll be doing it tomorrow. Let me just get my slides. So for anyone who is a little bit late, I'm offering to do a complimentary session. So you can work more closely with me, and people do, and great. But one of the things that I've noticed was that some people have a hurdle, and it's that sticking point to get started, to make it work. It could be just what to do with the charts, how to set it up, just all those initial questions that you don't know that you don't know. So I'm just offering to help you get started. I'll show you in more detail the strategy that I've mentioned so that you can, what's the phrase? Prove that it works by making it work. But nonetheless, if you're stuck in your trading right now, and if you feel like you're missing all the best setups, well, you've got a strategy that can help you find the setups. You've got a list of stocks already that can help you get started. I've already done that today for you. You shouldn't be sitting on the sidelines when you do find a good stock, because you've got 15 of the best. You've got a strategy to help you. So that has helped you now. But if you need some more attention, if you need a little bit more detail on that process, let's work on this complimentary session, as Glenn was just asking about, to actually make it work. It's more hands-on. So rather than me talking at you or to you, I'm going to be looking over your shoulder and say, go here, press this, click that, so that we can get the chart set up, the tools set up, and we'll look at the right stocks to follow. We'll get them in a watch list for you, so you know how to do that. So that the challenge of getting everything set up with the way that you want it set up, so that you're looking at something similar to what I'm using, is all done for you. So there's no excuses not to start the process that I'm describing. I'll show you the 6 money making, well, the blueprint that I've just shown you. I'll show you that in more detail. We've only got a very short space of time here. It's a group session. I'm not getting the feedback. If you don't ask a question, I'm just going to go as fast as I like. So I'll go a slow session. It's going to be limited, as you can appreciate, because it's going to be hands-on. There are limited spots. So I can't do it for a large number of people. I will be doing it tomorrow. And the next spot is 10:30 Eastern, Saturday morning. So about this time tomorrow, essentially. So I would be doing it today, but I'm doing an interview later today. So I'm sorry, but I'm going to be talking on TV. Thank you very much. Nonetheless, the next spot is going to be tomorrow morning. I'm going to do an open session again tomorrow, and Saturday morning. After that session, we'll be doing the hands-on workshop. So you will need a microphone, and you will need the ability to screen share. If you've not got a mic and you don't want to screen share, then this is not for you. I only want to work with serious traders, no lurkering, as we said earlier. So how do you get access? I would like you to email me. I'll pop this in the chat box. So I want you to email me. And my email is in the chat box. It's not live, Raj. It's going to be recorded. I don't know yet when it's going to be put out. I want to say TV, internet TV. It's all the same these days, but yes. So if you want to send me an email, just say interested. How do we get access? What I will do is I will send you the details and the instructions so that you can access the session, and it will be tomorrow, as I mentioned earlier. I'll be doing another session, so you'll have a Zoom reminder for the open session again, because I'm just trying one at the weekend just to see how it goes. I probably won't be making a regular habit of doing it at the weekend. I do like my free time, as I mentioned. I'm just going to be nearby doing other things. So I thought I'll take advantage of the situation and let everyone have a weekend access. Not everyone has a chance to get on these Friday sessions. So just send me an email and we'll take it from there. So what will happen is I will get an email out to you. You just need to send me an email. I'll respond to that with the details of how to actually get access. That's all you've got to do. You can hit reply on any of the emails that I do send you. They come through to the same email, so you'll be able to get access from those details. So yeah, you need to get involved. I'm intentionally putting hurdles in. There's no links to click. I want to help serious people. And just a small step actually prevents the people who are maybe less serious about making this work. So it's a silly little thing, but I've found that it does work. Right, with that said, let's land the plane. So what do you think of today's session? Production line trending, was it good, beneficial? What was your biggest takeaway? Awesome, Glenn, thank you very much. Just send me an email and we'll get that we'll get you on there. I know you asked last week and you missed out, so I'll give you a little bit of priority. Anyone who missed last week, because again, there's two people I think that missed last week. They just missed out. That's cool. As I said earlier, if you're not on time, you don't get in. It's as simple as that. Again, I want to give the people who want this the most the benefit of it. So what was your biggest takeaway? And Raj was the lucky winner last week. Enjoyed it very much. Certainly take advantage of Phil's offer. Okie dokie, folks. I'm not seeing any comments. I think everyone's busy emailing me. I can see my inbox is being pounded. Okay, we'll skip this slide there. I think everyone's too busy emailing. All right. Bring a friend. Bring a friend. It's free. If you want to bring a friend, let me know and we'll do that. If you want to bring a friend, let me know. Right, let's land the plane, folks. It was a great session. Thank you very much for your time and very much for your attention. I fully, as I intend to do, we could all be doing other things. I will be doing other things shortly. So if you're expecting a reply straight away, just be patient. I'll get to it later. As I mentioned, I'm going to be doing an interview straight after this call. But yeah, thank you very much for your time and attention. There are better things that we can all be doing with our time, with our attention. I'm very honored and pleased that you decide to spend an hour with me today. And for those people who are going to join me tomorrow, I'm very grateful that you're going to join me again tomorrow. I'm very excited to be able to help you just get over any sticking points, any hurdle, just get you set up with the best foot forward so that we can all make a lot of money from the markets. If you want to work more closely with me, you can quite easily go to the main site. I have regular accelerator groups in the week. If you want to work with me one-on-one, you can do. There are, as you can appreciate, there's very limited attention. Very limited time for that at the moment. You may have to wait. There is a waiting list at the moment, but it is a possibility should you choose to. So with that said, let's land the plane. Thank you again for your time, for your attention. As always, make sure that you enjoy yourself, have some fun, make sure that the weekend is full of fun, exciting things. Maybe it even involves ice cream. I know my, not necessarily immediate future, but my later future this afternoon is going to involve a piece of chocolate cake, which I spied in the fridge earlier. So that's going to be my sugar high for the day. But nonetheless, thank you for your time. Thank you for your attention. I'll see you tomorrow with a bit of luck, should all the emails fire off in the correct way.